Hello traders, Gary Wagner here, just before 10 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 11th day of July, 2014, and this is the daily report for gold and silver, our weekend review. And what a week we have seen in the market. Major break to the upside above resistance in gold. I'm now pegging that area as support. More on that throughout the show. First to gold, current price, you can see on the screen, $13.39, puts it up roughly $3 on the day. The low on the day, $13.33.10, the high, $13.40.30. Silver also climbing to higher prices, although in terms of percentage gains, it's only up about 0.12%, opposed to gold up 0.20% on the day. Of course, silver really had a tremendous spike the other day, trading well above 21 at 21.43, puts it up roughly 2-3 cents on the day. The low, 21.28, the high, 21.60. More on silver towards the end of the show. So traders, as you know, daily subscribers received a trade alert earlier this morning in which we effectively suggested raising stops. We also suggested any of those that pulled profits earlier on their long positions in gold actually go and re-enter onto the long side. And this is really what we're looking at. This, of course, is a daily chart. This is, of course, COMEX gold right in here. And in essence, what we saw is we initially entered our trade roughly at 1303 on this last one. So that would be what, 1305, right in this area. We entered it right after, or actually during the day, we had this tremendous rise. The market traded sideways for a while, and I put out a trade alert or a recommendation that we could either raise our stops, and we would raise them below 1311. That was one strategy. The other strategy was to put in a price order at roughly 1330. And so what happened was the market actually did come up, hit a high, I believe, of 1334, filled those orders on traders that had price orders to get out, and then the market effectively came down. Always above our stop point, but as it moved back up, my sense was that we were trading within this range, and it wouldn't be until we saw, or if and until we saw, a breakout really above 1330 to 1331, which was where I was pegging our current or former resistance at, that I would suggest that those guys actually go ahead and re-enter. That, of course, happened yesterday. And so what we did is we recommended that we trail our stops up for those sitting long from 1303. Trail your stop up roughly at this point to just below 1329, effectively putting us below this point, because my sense is if this market is going to continue to rise, what we're probably going to see is it forming a base in this area, but really not dipping too far below 1334. And that's why I said place it below 1329. I also suggested that traders looking to re-enter the market, because I have been getting emails about that, go ahead and do that and put the same stop in. So all traders should be long at this point, stops below 1329. Those that got out at 30 got in roughly, I believe the market was trading at around 37, 38 when we put out that recommendation. We'll see where it's going to close. We still have a couple more hours of trading before the week itself closes out. But effectively, all traders should be long this market, and stops have been determined, and a trade alert has been sent out. So traders, with that in mind, what am I looking at as current levels of resistance as well as current levels of support? Well, first of all, let's cover the support part of it. We talked about this particular top at 1331. This was the prior top that we had. Happened about mid-April in the market, as the market came from 1275 up to, call it 1331, before coming down and then really trading sideways for the better part of a month and a half. And then after that, we saw it break very, very strong to the downside. We did identify that we had somewhat of a compression triangle coming into the market. Market did break. It did break hard. I was hoping it would break to the upside. That wasn't to be the case. But we put a line in the sand, and the line in the sand that we put in was roughly 1232. It was based on this 76% retracement level. The market really never came to that area. It came a little shy of the area. What we've got, these lows sitting here just below 1240, call it 1238. And from there, we saw the market really begin to move up. We've had a series 2 trades that came out of this last rally in the market, this being the second component in the rally. I think the first one we got in at approximately 58, if memory serves me correct. And then once again, we saw the market really trade sideways for some time. Now, my sense was that we should have really good support at 1311, and that's where we had our stop. Of course, the stop has been moved much tighter right now, but that is what we were looking at. But we had this dynamic break above resistance the other day. So where do we see current levels of resistance and support? Well, my sense is that 1331, which is this top right in here, now it matches to this top right in here. That should be a supportive level for gold on a technical basis. Resistance is going to come in as we look at our fib retracements that I've put in, and I've put in 2 basic retracements, one from the dynamic rally, which began at the end of 2013 into the beginning of 2014, takes us to a top of 1391. From 1391, I have another retracement, and that takes us from this top here to the bottom of the correction at 1238. When we do that, you see these shorter lines here. They represent the corrective fib retracement, and these longer ones here, these represent the longer of the 2 fib retracements. There aren't really any harmonics. The closest that we get is 1311, 1316 right in here. Not really quite a harmonic. They're a little bit away, roughly $5 away, but that's the only real harmonics that we get. So I am looking at these levels genuinely as levels that should be a level that we could encounter some sort of resistance. Of course, the mother of all resistance areas right now is this top at 1391. And I do believe we have the opportunity to see the market move to that level. But before it does that, we could encounter some resistance at roughly 1342, and then again at 1256. And again, these are simply technical resistance levels based upon Fibonacci retracement. So we've got 42, 56, and then 91 above that. So traders, I want to spend a moment talking to you about where I think the market could in fact go. We've talked about resistance, we've talked about support. Now let's talk about a basic forecast. And this, of course, is going to be a very, very short-term forecast. It's based on intraday work, and it's based on this 360-minute chart. And really how I'm looking at the market is as follows. Obviously, we hit this bottom at 1240. That went into some sort of an impulse wave count. This, of course, would be a very, very minor count, but I'm looking at this as a first wave, wave 1. We got exactly a 61% retracement. That would be our wave 2. Wave 3, when we look at our extension up to this point right here, was actually a 161, almost 176% extension of our wave 1. So we've got wave 1, wave 2, our wave 3, of course. This is an extension rather than a retracement that we've put in. I believe that this was our corrective wave here, or wave 4. We are now in wave 5. One simple way to look at where we think this 5th wave could go is typically what you'll get in a marketplace is the fact that wave 1 and wave 5 will typically be of equal size. So what we can do is put in a scalable line here and extend it from the bottom here, and that will give us our first kind of a forecast. So let's go ahead and do that now. And as you can see, we have added a line to this particular area. And in essence, all that I've done is put in a scalable line from the beginning to the conclusion of what we're labeling as wave 1, 2, 3, 4. If this is correct and wave 5 equals wave 1, that should take us approximately to about 1355 to about 1355, and we are currently pegging a resistance level that was at 23% from the last chart at 1356. So for this particular trade, my strategy or exit strategy initial price target is going to be 1356, and it's based upon wave counts, extensions, and then a simple mathematical formula that says wave 1 and wave 5 are typically of the same size. Now, there's another way to do that, and that is to run yet another fib extension of this wave 1, or we could just simply move this one up. Let's go ahead and put another one. So traders, I've done just that. We've added one more fib extension, and it is a fib extension of this wave 1. We've then fixed the beginning or onset, the 0 point of this extension right here, which is roughly 1311. When we do that, of course, we get our 100%. We talked about that. That's at 1354. The next level above that, 64, 71, and then 81. Those are the different extensions. Let's go ahead and put in the 78 because something tells me that that's going to be close to our 91, our secondary top. So traders, when we do that, the 176% extension of wave 1, and realize that's not the most likely of scenarios because, as I said, typically wave 1 and wave 5 are about equal. But if we did see that happen, that would take us very, very close to that 1391 top, just shy by about $3.50 on that. So we also have been long our silver position roughly since about 2060. Markets trading roughly 80 cents higher than that, 21.41. What are we looking for in this? Of course, we recommended moving stops below $21 per ounce. It's kind of a loose stop, but then you get these wild swings in silver. 76% retracement. Right in here is 36. The 76 is from the top of this rally at 22 down to roughly 1860. My sense is that in terms of where I'm looking at levels of resistance, 21.80 and then again $22. Of course, we can consider this top equivalent to, because it occurred at the same time as gold hit 1391. So moves in gold above the levels we talked about, these are the targets or the levels that I will be looking for in silver. This has been Gary Wagner, wishing you as always good trading. We certainly got that this week. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.